we will now discuss the installment sales method. Installment sales are basically sales made on an installment basis, which means small payments are made over a long period of time. GAAP allows us two techniques here in this situation. First one is called the cost recovery method. Basically, that's where we defer all the gross profit until all the costs have been first recovered. Second, and much more common, is the installment sales method, which we're going to cover in the next 3 slides. So with the installment sales method, basically we're going to recognize our revenue and our related costs only when the cash is received. There are 2 components here. First is the partial recovery of the item cost itself, and second and more important is a gross profit component, which is based on the gross profit percentage. Let's review the key data for installment sales example. Let's say we sold some land on November 1st, 2017 for $800,000. There's going to be 4 equal annual payments of $200,000 plus interest. Now the land cost us $560,000. So to figure out our gross profit percentage, it's the 800 minus the 560 divided by the 800 gets us a 30% margin, pretty healthy gross profit margin. So our entries here are, first of all, to record the installment sale, a debit to installment receivable for $800,000, a credit to the inventory, the cost of $560,000, and then a credit to deferred gross profit, a liability of $240,000. Next, to record the annual cash collection for each of those next 4 years, I would have to debit cash for $200,000, credit my installment receivable for $200,000, and then I would have to debit the deferred gross profit, the liability account, for $60,000, and then book a credit to my realized gross profit on my income statement for $60,000. Thus, in summary, if I take the $60,000 per year times the 4 years of recognition, that gets us to our overall total gross profit of $240,000.